What has been your view, Harish, on this earnings season? And your portfolios are large, so you would not be beholden to only the Nifty 50 performance, but maybe the broader 250 or 500 performance. Have you been terribly disappointed, or do you think this is a transitionary period wherein, because the government spends have been lower, this quarter should ideally have been this way and it's turning out to be that way? Are you disappointed, or was this on expected lines?
See, I think there is definitely a point of disappointment in one end, and in one thing it is an unexpected line. So let me try and nuance both these takes. Where we've been disappointed is actually on the top line growth. Top line growth for the, let's say, the top 500 or the top 1,000 companies have actually come down quite significantly. It is growing, just about in nominal GDP terms, or possibly a shade lower in the last few quarters, which we think is very disappointing, given the fact that this is the I mean, these 1,000 companies are possibly India's organized sector, which typically tend to take share away from the unorganized space. So we are actually kind of worried by the persistent sluggish top line growth that we've seen over the course of the last 3-4 quarters. So that's definitely an area of bother for us, and we are far more watchful of the top line led beat which comes through in few sectors and stocks or businesses that we want to kind of latch on to. On the other comment that I said, which was on expected lines, that is as far as the margins is concerned. I mean, we were cognizant of the fact that we were getting into the last 2-3 quarters wherein margins were actually very elevated on the base. And one way we track the margins is actually the spread between WPI and CPI. It's a nice mean reverting kind of a pattern. Whenever WPI significantly overshoots CPI, we've actually seen margins contract and vice versa. I mean, it's kind of intuitive because customers are not yet felt the full the burden of the cost increases that manufacturers are facing, and therefore there is a margin contraction and vice versa. So we had gone into that phase in 2023-24, FY24, wherein we saw actually margins expand meaningfully, and therefore now we are seeing them kind of come off. So that, to my mind, is as per expectations. I mean, we didn't actually kind of think that margins is what is going to save the day for Indian earnings. But like I said, there has been a persistent kind of a slowdown. What seemed to come through only in few patches has kind of spread. That's the other area that we need to take into account. Earlier, it was only possibly the consumer staple companies that were kind of complaining. But now I think that area has kind of moved on to more than just a few patches, which is talking about, a sluggish top line. So this is something that we have to watch out. Yes, there could be a potential case that we had elections in Q1, which kind of the overall momentum kind of softened. You also had monsoons and the extended heat wave that caused some kind of an impact, and therefore we think that the festive quarter, which is the current quarter, holds significant importance for corporate India's earnings trajectory. We would be very watchful for that. The area that has been positive for us has been the capex, continued capex spending as far as private capex is concerned. I think that's an area which is encouraging, because we are big believers in the fact that capex spend today is what is likely to get to profit pools and cash flow streams 2-3 years down the line. And on that count, I think we continue to be positively encouraged by the developments that we've seen as far as the earnings print goes.